So, thank you very much, Kai Rönnlund, for your introduction. Now it's my part to take over and first introduce myself, then give you a brief introduction to the topic we want to have on the panel, and then introduce the participants to you. Now, maybe we have, yeah, that sounds good. Now, instead of introducing myself, I am introducing the organization I am representing here. As you see here, we have an organization that is based in Munich, is based in Augsburg, and is based in Bayreuth, with some 160 people working there, 8 professors, about 60 in the meanwhile research assistants, and more than 100 student assistants that are working with us. And we are financed mainly via projects and other cooperations in the human resource field with industry partners from banking, but also many other industries. As you see here, we want to be good in teaching, yeah? Oh, pardon me. On the right-hand side, we want to be good in research, and we want to excel in projects working together with industry partners, right? And in which areas do we do that? We start out with the customer segment. We have a lot of projects in digitalization and innovation. We also think in categories of business model and processes, of course, and all the infrastructure IT stuff you also need to be successful in this area. The team is very interdisciplinary. There are not only guys from business administration, but also from business information systems engineering, industrial engineering, mathematics, physics, IT, of course. And since we are Swabians, partially at least, we don't like to burn money, right? Therefore, everything what we do is value-based, right? We want to create money for ourselves, but also, of course, for our business partners. And many of the projects we are doing excel around digitalization. You probably have heard that only Deutsche Bank, right, in the situation they are right now in this transformation, is spending around €1 billion in digitalization, and of course we want to participate in things like that and actually do. Okay, in terms of quality, teaching, research and industry projects, there are no rankings. In teaching there are some rankings, so I brought one ranking with you that I always like to show when I'm in Frankfurt. You probably think that in business administration of Mannheim or Cologne or Frankfurt or Munich, and you see that our degree program, some 25 of my students I've brought with me today, this is in 3 times within 10 years the best master program we have in Germany, better than Mannheim, better than Frankfurt or Munich. The other Munich university, we cooperate with the Technical University of Munich. And by the way, if you think of Cologne, they didn't even participate because they were afraid that the results are too bad, right? Now, what's the difference is that our students not only learn business administration, they also learn a lot of business information systems engineering, thinking of the customer, thinking of business models, thinking of processes and so on, and are particularly appropriate then for projects in the area of digitalization and cooperation of fintechs and banks, right? Now, after the commercial part, let me come to the content. As Kai Rönnlund explained to you at the beginning of his talk, it's not the first transformation, it's not the first disruption we have. But if you think how with the example of the floor that was replaced by electronic exchange rates was practically wiped away, this took years. Or maybe a decade and so on. There is a situation, a danger that it might be much faster in the moment. And indeed, what we want to discuss today with you is how will this business model change? What will be the changing role of the participants from the market side, right? You see on the upper side, but also from the part of technology. And what are the right answers, right? We have to provide depending what is our role in this game. Now, also in the upper towers of banks, right, where you have sometimes a little bit too less oxygen, and some people hoped that the internet, this thing will go away, and all the oldest of you remember the new economy hype, where indeed a lot of efforts that were taken there was not successful. They learn that the internet will not go away, and this digitalization will not go away, and they have to really to think about that, right? No, this doesn't work. Okay. So what are the dangers? The dangers is that indeed banks are displaced, that they are diminished, that they are disintermediated. We will see a few examples today. But I guess the even larger danger is knowing that most of the fintechs that are here today will not be here anymore in the next 5 years, not in the next 10 years, right? But still, even if only 10 or 5% of them are successful, what they will do is that they manage to for banks to decrease the margins considerably, right? And when you now see the situation that banks have a rigid fixed cost situation and diminishing margins is more, I think, the much larger danger than that they lose business volume, right? We saw that in the talk we just had, that the volumes are not really impressive with most of the fintechs so far. So that is nowadays, maybe in the next 2-3 years, not the biggest danger, but here I see the larger one, right? Now, what banks are really having difficulties with is to imagine, right, what are the needs of this generation that is digital natives, how they behave different today, in 5 years, in 10 years, right, when they are successful in working, when they are successful in earning money and so on. I like to give maybe one example. If people are asked if the house is burning, what would they rather save? Their cat or the smartphone? 54% of young people say the smartphone, right? If people are asked if they would like to, young people are asked if they want to spend the next weekend without sex or without a smartphone, right? Some 50% of the men say rather they would want to have the smartphone and no sex, and actually 70% of the females, right? So thinking of how they behave differently, right? And what does that mean in such a world, right, which is a much more digital, which is not a question of branch offices anymore, and what are the right answers for this generation? This is the questions many banks pose, and where fintechs have definitely many much more appropriate, much more global answers than banks have today, right? Now, here you see where banks are attacked today, right? As you see here, the main threats are in retail, the main threats are in payment, and we just saw a talk on lending, right? All the other areas are not really impressive at the moment, right? But as I said, it's not the business volume that is carrying. These are the indirect effects of the fintechs. So if I put that together, I would say, knowing that payment is the bedrock of banking, and if you lose payment, you lose the relationship. And therefore, it might be possible that this is not the only volcano that is going to erupt, right? And this is our topic we want to discuss today with you. And before we do so, I'd like to introduce the participants of the panel to you. You will have realized that I have spoken 5 minutes longer than was planned. The reason simply is that Pascal Bouvier missed his flight in Paris today, and he passed over his 5 minutes to me, right? So I also don't have to introduce him to you, but I want to introduce Dominik Steinkühler. By the way, if you don't speak English perfectly, but rather German or even Swabian, yeah, all of the participants on the panels speak 3 languages, right? English, German, and Swabian, right? There's one exception, that is Mr. Deckert. He comes from Cologne, right? But since my wife also comes from Cologne, I might introduce from the Rhineland Cologne accent to the Swabian, or whatever is your accent is also no problem, right? So Dominik Steinkühler is co-founder and managing director of Lendico. All of you probably know. And he has a background from the RWTH Aachen, where he got his PhD, worked for the Boston Consulting Group before he went to Rocket Internet, and in Lendico, as I said, he's responsible for managing and also founder of this, and Lendico is present in 7 countries on 3 continents and has very different experience in these countries. I guess it will be very interesting to share his experience. Now, he represents the fintech scene. In Germany, we also need lawyers, right, when we do something to make sure that we don't have legal problems after that. So this is the role of Andreas Lober, also from Swabian, and he actually advises mainly fintechs, not only from the financial services scene. For instance, Verifox is one of his clients that may be named, which is quite successful, and he helps these fintechs to adhere to the rules of mainly privacy, but also other legal issues, right? And then we have one guy from banking. Martin Deckert has a long career in banking, but given the threats of the, he was long years the board member of UBS here in Frankfurt, and now he has decided to be not more a board member of banking in the future, but rather make some projects now in the next months. And starting then, I guess in January 1st, 17, he will go to a consulting company that advises banks how to cooperate between fintechs and banks. And therefore he can also bring his experience, long time experience from banking, together with our subject today. But I hope that some real bankers that still say banking is possible without fintechs are also here in the room. So I already warned him that he might do the banker's role alone, but maybe in the room we have some more. Then please join in and help him or make another statement that Martin Deckert doesn't do anymore. Kai Rönnlund, I have not to introduce to you. He will also join then the panel, and so I arranged with all of them that they give some answers of these areas. How is that with win, or is it only a partial win-win that will replace banks in the long run? What are the problems? Why banks cannot be so agile as fintechs and so on? Yeah, and what will be the long-term pictures we're heading at, right? And I asked the participants to give their introductory statement in the order I placed here on this transparency, and so I asked Dominik Steinkühler to start up. Where is he? Okay. Thank you very much. Hi. Do it here.
Hello, everybody. Thank you, Mr. Buhl, for the kind introduction. I'm very happy to be here today, and I think it's a great sign that the Euro Finance Week now also has a tech day, because I think banks and fintechs have a lot of things to learn from each other, especially when it comes to benefiting the end customer. And this event today is really an expression that the two groups are moving closer towards each other and see what everybody is basically doing. So before addressing the 3 topics, I want to briefly introduce to you what Lendico is actually doing. My previous speaker described peer-to-peer lending already, so I can keep it rather short. What we with Lendico are doing is we're building a global online lending marketplace, right? So we are basically lifting the process of getting a loan out of the banking network and put into an online many-to-many marketplace, and in that way we eliminate the need for the bank as an intermediary who takes in deposits on the one side and hands out the loans on the other side, because on the marketplace you do have a direct one-to-one connection between the borrowers and the investors. The borrowers with us, they can be either retail or business borrowers, and the investors, they can also be either retail investors or institutional investors. And we as a marketplace, we provide all the ancillary services that usually the bank would do. Yeah? So we do the risk assessment, we do the pricing of the loan, and also the entire transaction management. What we don't do is, we do not take any credit risk ourselves. Yeah? So we are not part of the loan contract. The borrower and the investor, they contract directly on the marketplace between themselves. And in that way, we also transform the basic nature of the business relationship of the credit business, right? Because in the traditional intermediated banking world, the business model is based on the interest rate spread. Yeah? On the marketplace model, the business model is based on a pure commission model. We as a marketplace, we only take commission. We started out, as Professor Buhl mentioned, in Germany, December 2013. Since then, we expanded to 6 further countries across 3 continents, have 300-something thousand customers, and are looking to expand further. On the first question, why can banks not act like fintech? In my opinion, there are 2 key advantages of the marketplace model for credit compared to the traditional banking model. The first one is cost advantage, and the second one is a convenience, user experience advantage. The cost advantage has 3 subcomponents. The first one being is, as a pure online player, we don't need to maintain a physical infrastructure, right? Especially branches. We don't have any branch network. And if you look at the traditional banking sphere, branches can make up to 50% of the total cost structure of some banking groups, which we just don't have. The second cost advantage is we don't have any regulatory capital. And now the bankers might scream out, hey, that's unfair, it's not a level playing field. Sure, you have it a lot easier. Well, then again, remember, we don't have any credit risk on our books. We are just the marketplace operator. And also the parties that transact on the marketplace, there is no maturity transformation. There is no leverage. There's perfect transparency. So the regulator should actually be quite happy because there is no too big to fail in the marketplace model. And the third advantage is the technology that brings the cost advantage, because we operate with tailor-made state-of-the-art technology. You cannot compare it to the legacy systems that are in place in many banks, where you spend billions of euros each year just for run the bank projects, which don't improve the customer experience. So that's the cost advantage. On the convenience user experience advantage, it comes from focus. We only do credit. We do nothing else. And we can focus our entire effort to make this product perfect. And that's actually also the general advantage the fintechs have. They cherry pick from the entire banking value chain. While banks always offer end-to-end services across each financial service spectrums, the fintechs, they focus and they dedicate to entire effort to make that perfect for the customer. In terms of win-win situations, where are partnerships possible? We think there are a lot of partnerships potential between banks and fintechs, and with Lendico we already have partnerships in 3 different forms or ways. The first one is a rather simple one, where we use a bank as a fronting bank. In Germany, for example, for regulatory reasons, we need a bank to issue the loans, so it's a service we purchase. Second model is where you have banks as investors, so they fill one side of the marketplace. And for the bank, it's really a win-win situation, as you said, because they engage in their traditional means of taking in deposits on the one side and issuing loans on the other side. The only difference is that they outsource the customer acquisition and the entire loan operations to us as a marketplace operator. And then the third form of cooperation is more closely, it's what we have in Brazil, where we have a joint venture with a local bank, where we actually jointly engage in product development and developing the market penetration, and both parties contribute their core competencies, which for the banks are customer access and the strong funding base, and for us it's the technological competencies, and also in terms of, for example, risk analytics, where we contribute our knowledge to the joint venture. So overall, yes, I think there are lots of win-win situations possible where banks and fintechs can be friends to create additional revenue and cost-saving opportunities. But as in all business model innovation processes, there will also be some losers in the market, the players that get stuck in their old ways of doing business and fail to introduce the necessary innovations into their business model. Thank you.
Okay. Thank you very much. Next introduction, as I said, comes from Andreas Lober. Where is he? Okay. So you will provide us with the legal part. Okay.
Hello. Good morning. Thank you. I found the survey very interesting, like whether people can do without smartphones or without sex. Did somebody ask how many people can do without a bank advisor for a week?
I don't know.
Okay.
I only know that most people trust their Facebook's friends much more than the bank advisor.
I think that tells a lot as well. And I guess for people living for 1 week without a bank advisor, it would also be quite depressive for the banks. So are win-win situations possible? I think we already heard quite a bit. So the banking license, in my experience, is the most important aspect why fintechs are interested in cooperating with banks, because it saves them quite a bit of headache with regard to regulatory issues. So of course the banks cooperating this way can win. I think one issue which hasn't been touched so far is that banks can and should learn a lot from fintechs in terms of innovation, whether they just look and learn, or whether they look and invest or buy. And I think the fintechs are much closer to the younger generation, much closer to innovation. So banks might observe this and see fintechs as a test case. And I think maybe one aspect to add with regard to win-win situations, or something which has to be kept in mind, is who owns the user in the end. So the question of user data ownership, or whether banks will lose this or not. So the next question is, can banks act like fintechs? I don't think so. At the moment, it's a completely different world in terms of costs and in terms of culture. And I think banks have a long tradition and have grown huge, and all departments which are threatened by fintechs or by new innovations will massively try to stall this development. So that's an internal factor which prevents banks from acting as fintechs. There's a completely different approach with regard to risks. An important capital for banks is trust and reputation, and for fintech it's speed and a user-centric approach, and this doesn't always match. And probably banks have to become much more, much faster and much more user-centric. But in terms of reputation and risk, it's probably also in a way justified that banks take a little bit less risk than a fintech, because if something goes wrong in a bank, that's really bad news and it will be in the headlines everywhere. Still, I think there would be potential for banks. They don't dare enough, and that's probably why they just think about risks and not really from a user perspective. So will banks survive in the long term? I guess so, but they in 10 years' time they probably won't look like they looked in the 19th century, and not like private bankers since 200 years or so. And maybe in 10 or 20 years you won't really differentiate between banks and fintechs anymore, but banks have grown more digital and fintechs have grown full stop.
Okay, so thanks a lot. Now with Kai Rönnlund, we had an investor with a long-time banking experience. With Dominik Steinkühler, we had one representative of the fintech scene, right? With Andreas Lober, we had one guy helping them to provide, to make sure that they have no legal problems. And now comes the main point, the only banker in the audience, right? Who will give the banker and the cooperation perspective from his experience. Martin, we are looking forward to hear from you.
Thanks for the nice introduction. And as a guy from Cologne, I'm always optimistic, so I'm not that pessimistic, and I don't share that gloomy picture which was kind of built here. There are a couple of reasons for that, but I actually like the volcano picture because, as you have seen, the banks are not top of the volcano. We are right next to it. The question is, who's on top of it, right? And can the buildings be stable enough to survive that volcano picture? Anyway, let me start a little bit from the digitalization view, how we currently see this in the banks. I strongly believe it will be crucial, and how depending is your business model on digitalization, right? There are a couple of banks which are not depending on digitalization. It's not everybody. So there will some banks survive, to answer the last question. The question is, do you have a roadmap on digitalization? Do you know what your strategy means in terms of digitalization? And I think most banks are still building this and trying to figure out where are we exactly there. And then you might decide, I have to switch my business model or close my business model or change the entire bank, which is possible. I think banks can still change. It sounds a little bit like banks are not able to change, and I tell a little bit later how UBS did it in the past. And then the most important question is then to execute your roadmap. It's not only building one, it's executing one. And there's a timing aspect. We have heard a lot, IT, especially IT, is slow in banks. But where's that coming from? It's coming from that we told IT, be slow. Yeah, make it all 110% sure, whatever we do in banks. And that has changed over the last 12 months, I believe. There are a couple of areas in banks where you have innovation, where you have the new IT already developing, and it's faster than in the past. So I don't think that we stick to that picture, banks are always slow. Second point is financial aspects. I would not underestimate the financial power of banks to do stuff. And if you ask me, will banks survive in the long term, the question is how many fintechs will survive? That's the most, I think, that at least the same significance of that question. The culture aspect, I agree. There are some issues there. As I said, in IT, we still work in that 12 to 18 months release cycle, but it's changing. And a couple of banks already have disconnected the front end from the back end. Coming back to digitalization, what does it mean? It doesn't mean that you build an app and put it in front of your front end. It's a little bit more in banks. It's product design, it's risk management, there is client needs and convenience, there's process simplification, the back office end. So all these aspects are digitalization. And coming back to culture, it's a threat for most of the people, because you might lose your job, because it's all automated and so on. So banks have to overcome that cultural mindset change, and I think it will work over time. It just takes some time. Fintech, so where can we learn? I think we can learn, as you've heard a lot of here, from innovation, from mindset, from speed, trial and error. But also trial and error. I mean, there was a big misunderstanding in banks. Zero tolerance means no mistakes, and that is also changing. So we are allowed to make changes and mistakes with changes, again, in the bank. At least at UBS, we are allowed to do this because that misunderstanding was solved, that our CEO told everybody it's allowed to make a mistake, which is kind of new. I mean, when you look after the crisis, it was natural that mistakes were not really well received for most senior managers. And then what is the answer of the banks? They all build niches currently, right? Innovation labs, incubator labs. There's a lot of stuff going on that we have more innovation, or at least niches for innovation, where you can have these crazy people sitting in a loft and building stuff with trial and error methods. So don't underestimate the financial power, and don't underestimate the execution power of banks once it's running, once the machine is up and running. So what did UBS do? When you look what we did, we focused our model on wealth management, especially on the question, can we answer questions for clients, and can we give advice to clients? So what was then done was we built a machine where you can have every event of the world in 12 hours or 24 hours in your portfolio, and you get a flag, including all the channels, like be it my mobile, be it apps, be whatever. So there is a form of digitalization. The main success factor was that UBS focused on one area, and not everything has to be digitalized. So to conclude, I think it doesn't mean only an app is sufficient to have a new business model. Don't underestimate the financial and the execution power of banks. And I think if we get together with fintechs, there's a lot to learn from both sides. The one side is more innovation and speed, and the other side is basically regulatory stuff, and how can you run a successful business. There's also another aspect. I'm not sure how many fintechs make money. It's a question, and when you don't make money, you can't survive. So there are some questions on the last questions here raised. Who survives in the long term? I'm not sure. I'm sure banks will survive, not all of them, but I'm also sure not all fintechs will survive, only a small portion of them.
Okay, thanks a lot. Now I ask Kai Rönnlund to join us here, and now it's your turn, right? In my seminars, I normally tell the students that they should start questions when there is a presentation of other students, because I say you can put the nice questions. If you don't, I ask the nasty ones, right? So be friendly to the panelists and ask nice questions. Who want to start? Do we have a microphone in the somewhere here? No. Okay, so I guess I will run with the microphone. If somebody want to ask a question, I can move. No questions? You want to have the... Oh, okay, great.
Edith Rickler. I'm one of the real bankers who has been in banking for 30 years, but I would not say that fintechs don't have a role to play. So I'm definitely looking at fintechs. But I'm amazed by the statement. This is not so much a question as a statement that you've been in the business for 2 years, right? The company Lendico. And you're talking about your flexible platform and how wonderful it is to have that platform. But I am convinced in 2 years' time you'll find that platform is no longer really functional, and it will have to be you will have to do investments into it. And that's what banks find, that there's a constant investment funding cycle they have to follow. But the banks have done it longer than you have. So I would not really, sort of be so proud of your financial platform and how wonderful, flexible it is. You'll find, I'm convinced, that will be a problem for you in a few years' time.
So I'm not sure if this question was friendly, but it was at least to Dominik Steinkühler.
Well, as she said, it wasn't a question, but more of a statement. And so I'll reply with a statement myself, basically saying that you're absolutely right. We are investing continuously in our IT platform, and I think that what makes us more flexible, we are continuously building the platform. Yeah? It's not that if you see like Deutsche Bank Postbank merger, I invest $1 billion for Magellan and try to merge the platforms, and then I decide, well, I changed the business model again. I have to invest the same money just to separate it. Yeah, it's our platform is tailor-made to do the credit. Yeah, and the way of issuing the credit, it's not changing that much. What you're referring to is scalability. Yeah, absolutely. And we are constantly investing in scalability and in automatizing the processes. Yeah, and we will not be surprised if instead of issuing 20 million per month, we issue 200 million per month. Then the systems needs to be more stable. That's true, but that's incorporated in the business model. Yeah.
Okay. Next.
Just one comment. I think it's all that fine line, and I guess you will stick on the other side. Whenever you come into regulation, you're dead, right? With your model, you would be dead. So you always will need a bank, and then the question in the future will be, what is left for the banks in your business model? I think volume-wise, these lending platforms are not that big currently, but they might become bigger. But there is a threat also for you whenever regulation comes closer to IT providers, right? And I'm sure that will come. And then there's that fine line you always have to stick to, and that might also keep you in a certain niche for your business, which is fine. So there is a place for niche players, fine. But just be careful, and I guess you know that, whenever you cross the line, you are in trouble.
I think that was a very interesting remark, because I find it very interesting to see whether it's easier for the fintech to replace the bank or for the bank to replace the fintech.
I just want to add directly to the comment, because that's a common misunderstanding if we get close to regulation. Yeah? We are regulated by 7 different regulators in 7 different countries. Yeah? So for our model, there is no unified regulation. In Germany, it's a bit of a special situation because you need to be a regulated bank to issue credit. Right? That's different in other countries. In the Netherlands, for example, we are a licensed credit provider. Report to the AFM, as every other credit provider does. So we are regulated. It's just that the way we do the business triggers a different regulation than what you need if you take in deposits like a full-blown bank is doing.
Okay, so you catalyzed interesting question. We have also one remark from Kai Rönnlund.
That's definitely a valid comment. What I've been seeing, it's definitely a continuous investment. And it's not easy, definitely, because it's also that you are starting to see what comes then the following step and what does it demand. It's like the banking system I said in the 90s. It's a certain thing, but it's growing and growing and growing. and it's a continuous investment. And regarding the regulation on the IT side, yeah, of course, it's peer-to-peer lending, and you don't, in Germany you need a banking license. It's different in different countries, but definitely some playing rules, European, is needed, because, yeah, you know, don't have the failure in the same way in banks, but you have a big IT risk, that's for sure. And when it's growing, it's a question, does it work or doesn't it work? So I think it's a challenge for sure. And the banks, of course, have done it longer. I still think that the agility is still with the fintech scene, but the banks have a lot to contribute on that, and I think there's a lot of opportunities to cooperate, for sure.
Okay, so the next question, be it friendly, half-friendly, or nasty, here we go. Where's the microphone? Okay.
See, I hope this is a friendly question. It's rather for Martin and Dominik. Mm-hmm. What kind of fintechs do you admire most and why?
So that's the
for him it's
again,
difficult,
right? So for him it's easy, right? Himself. I think there are a couple of fintechs out on the market which have new models. They look like, just to name one company, Wikifolio. It's just a new model, right? And it's scalable. It looks good. Question is, does it make money? I don't know. And it was all built in more or less 2 to 3 years. So the speed to build up 7 billion trading volume was just incredible, right? So there are a couple of companies out. But I don't think it's 1 or 2 or 3 companies. It's more like the mindset of these companies that's impressing. And as you said correctly, the speed, how easy it goes, the low cost to produce stuff, which would also be possible for banks, right? Because if you started on a greenfield basis, it's easy to do. We can't do this. Whenever you, as a bank, start a new company, you're automatically fully under the regulation. Whatever you do, you cannot just outsource part of it and have a new company. When you're owner of that company, you're fully regulated. So that's another issue why I believe that banks are not that easy, next to maybe we are not attracting the right people, so easy to building up own companies and start something from scratch.
And before I pass over the question to you, what is the fintech you admire most, except Lendico, of course?
I need to come up with a new answer. I think it's unfair to pick out specific ones, right? I mean, there are a lot of fintechs out there that just change business models a little bit, yeah, and they make great business. I mean, in our area, it's like Lending Club in the US, it's Lober in the UK. They came up with the business model in the first place. But then I think the really interesting fintechs, or let's say more technology companies, are the ones that really introduce entirely new business processes. Yeah, like PayPal, when they first started their mobile payment services, which was a totally different approach to doing payment than it used to be before. Yeah, a lot of the companies in the blockchain sphere. Yeah, right now you don't have any real usable applications for the end user, but I think that's a super interesting sector where a lot of innovation will come out. And actually, a lot of the banks are strongly engaged in doing blockchain research. Yeah.
Okay, so we had 2 questions. Is there a third one in the room? Okay, in the back, yep.
I have a question relating to fintech's ability to scale into B2B. We talk about fintech, which is based on customer experience in the internet. It's a B2C. But we know that banks are in the sector, they're doing a lot of B2B. Large-scale loaning, institutional loaning, etc. So how does fintech scale up? Can fintech actually scale up into this kind of different sectors which are, let's say, stronger, bigger?
The question is for Dominik, or?
Yes, for Dominik.
Okay, so you start and the other participants comment, okay?
Yeah, so starting in my specific vertical, lending. Yeah, what you see happening is that the entire lending activity started out in the really small tickets, yeah, for consumer, then the lending went into SME lending, then you see mortgages, bigger tickets evolving. So I think at the moment the advantage of the fintechs is really in processes that you can automatize as much as possible, and if you go into really large loans, that doesn't work yet. Yeah, there you have a different disintermediation going on where the lending is transferred from the banking sphere to more of a debt fund direct lending activities, which you see happening in the US much more strongly than what you see in Europe. And here I think the advantage of the fintechs is not that great because you cannot automatize the process to such degree as is necessary to make the technology worthwhile. In other B2B sectors, I think fintechs can absolutely play a significant part. Yeah, the 360T acquisition by Deutsche Börse is very much wholesale focused. If we look at our platform on the investor side, we are doing the majority of the volume with institutional clients, which are also fully automatized. So here we provide them an opportunity to invest. So it really depends on kind of, let's say, the degree of automatization you can really incorporate in the process to see what the potential fintechs are.
Maybe to add, what I believe is would be really useful and helpful for banks is if we have more fintechs concentrating on the back office regulatory stuff, right? Do we have somebody who can take over MR risk for us in Germany, right? Somebody who provides everything, maybe a provider for all banks so that we don't have to do own projects in every bank for changing every stuff. Anti-money laundering, another area, if there would be one nice machine to run anti-money laundering, it's done, right? So we don't have to implement the machines on ourselves. The whole regulatory area, regulatory reporting area would be a nice area where we would like to see more fintechs coming up with good solutions, because whenever clients are not really involved, for banks, the only game is can I make it very, very efficient without losing a lot of power and a lot of project investment resources on these things. So if that would be an area for fintechs, and I think we see later Bancalis who has an approach on that, that would clearly help banks on if you take this as B2B and not only banks or B2C.
Okay. You want to comment on that?
Yeah.
How about you?
I can comment a little bit. It's probably also a question about what is the margins in the business. I mean, B2B tend to be less margin. And that means you need a lot of volume from the start. And it takes time to build up. And it's a question of standardization then also. If you don't have the standardization, you need volume. It's very hard to do that on a platform. And, but it's coming. But it takes much more time. And that's why it's starting the other end, I think.
Okay. Any more questions in the room?
I mean, just as a moderator,
okay.
I have to always speed up things.
Okay.
So you would have another 3 or 4 minutes.
I know.
Speedy
I know.
question.
Three.
So.
Okay. Well, then there is the last question, and then comes one nasty from my side. Okay. Did you bring him the microphone, please? Yep.
It's a question for Martin. Martin, you said if fintechs come close to regulation, they are dead. Does it mean you demand or you force the government to put a stronger regulation in terms and put an end to your competitors?
I'm not forcing the regulator. The point is there has to be the same playing field, right? The same level for everybody. And there are a couple of fintechs out which offer, from a bank view, advice. Right? It depends how you define it. If we give advice, you have the whole regulatory stuff behind it, protocols, advisory protocols, suitability, product suitability, client suitability, and. If you look at a couple of fintechs, they don't have this because they're only an IT provider. But if a fintech gives like a recommendation, that's how you basically can figure out your own risk profile and your own investment appetite. In banks, that would be counted already as advisory services, and then you're in the regulation. So I think there are a couple of areas where we should have the same rules and regulations for everybody.
Okay, so thanks.
But I would force the regulator to put less regulatory stuff on it, on everybody.
Okay. So I also have one nasty question, starting with you, and then head it over to the other one. You mentioned in your talk that if banks invest in your business, right, that they only outsource the customer contact, this nasty VNC business with this low volume customers and so on. Well, is that true? Or do banks lose their relationship? And aren't you eager enough, once you have the data, to make more of that? I mean, Rocket Internet with having customer data without doing additional business, I can't imagine that. So how about that?
Yeah, so more data is always better, obviously, because you can understand the customer better. Let me answer with an analogy. I mean, what I found amazing about the banks is they sit on such a wealth of data and they don't make best use of it.
Absolutely
and,
true.
You know, in some countries it's due to regulation. For example, if I have a checking account and I see that suddenly somebody gets a higher monthly salary, you know, I could think of, well, maybe he got promoted. I could either write him a congratulation or say, okay, do you want to adapt your retirement savings? But that transfer of knowledge is not happening between the banking silos. And the fintechs, they should make use of it, but since most of them are very focused, they cannot make the transition, because they only offer one product. If we do the customer acquisition for the banks, do they lose the contact? Yes, they do. If they just act an investor, they do. But would they get the customer in the first place? They probably won't. The banks we are working with, they see it as a means to diversify their portfolio. If they have a very, on the asset side, a very concentrated portfolio, they through us can get exposure in different countries, in different regions. So for them, it's really a risk management activity. If they have a pretty large depot A and they don't know where to put the money, we can just provide them a means to, to manage their balance sheet better. But what you're probably aiming at most is the customer contact is key. And you had it on one of the slides where banks get not this intermediate bit. What was the middle one? Diminished, I think, and you see that more with the price comparison sites, basically, where the banks, they just become product providers, they just become the production facilities, but the customer contact is held with the price comparison site, and the product provider is very easily interchangeable. So that's a risk not only banks, but actually every industry needs to be very aware of, that you need to maintain the contact with the end customer, otherwise you cannot sell. And banks rely to a large degree on cross-selling, of selling additional products. I mean, at one German bank I now get money if I open up a checking account, but if they can't do any additional business.
Okay. So you may realize that this question was not completely answered, right? Our time is over. I regret that, but still, are there important final remarks from Martin or any of you guys? Do you have one?
Maybe on that customer data area. I still think that banks will come up with models there, right? How to use the data better. We are currently not, or have not put a lot of investment in that over the last couple of years because of the crisis and everything. There's also a perception issue. If you use, as a bank, data for whatever, clients might lose trust. And I think there's a perception thing we have to change somewhere in the market, that clients trust us if we still use the data because it might be for their benefit. So there's a long way to go on that one too.
Okay.
Final
short remark?
Very short remark.
I always have the red one.
You can turn the question around also with banks. What we've been seeing, actually, we help them to bring out new products, because on the private banking side, it's a question of structuring new products around what we are offering again then. So it's kind of also getting better products for them.
Yeah. So thank you very much for listening. Thank you very much for asking questions. The final remark that banks should learn to make more out of their data is one message I place in Frankfurt here in every talk in the last 25 years, definitely. So Hans-Gert Penzel will definitely take that up in the conversations that will come up after us. So you have a very important one sentence you want to say?
Yes, one sentence.
Okay.
Use the data as a bank, but use it wisely, and you won't be into trouble.
I mean, that's clear. Okay, great. Thanks a lot. And now I hand over to Hans-Gert and thank the panelists and thank you very much.